Good morning, Mr. Buffett and Mr. Munger. I'm Cary Blecker from Wellington, Florida. Thank you for stopping by the convention center before, Mr. Buffett. It's nice to see you again.
My pleasure.
Recently, much has been made of the fact that Berkshire is the largest company to not be included in the S&P 500. Do you gentlemen have an opinion or what is your opinion as to whether Berkshire should be included and why? Thank you.
Yeah, that's a question we've gotten asked quite often since the General Re deal was announced. Berkshire, if you talk to the S&P people, I think they would say, and I think they've even said it publicly, or at least a representative has, that we certainly qualify in every way that, except from what they might term the liquidity standpoint. It's probable that maybe it's 6%, maybe 7% of the investment funds, the equity funds in the United States are indexed, and the number is, or the amount is going up somewhat as we go along. I saw an article to the contrary on that, but I think they had it wrong. The amount of money, index money, is, in my view, rising month by month. So if you were to put Berkshire into the index tomorrow, in effect, you'd have a market order to buy 6 to 7% of the company, or roughly 100,000 shares of A. That would not be good. The stock would obviously spike up dramatically, as some stocks already have when they've been added. There have been some. I've looked at the list of all the companies that have been added, and some have moved up substantially. And we would have even more impact at Berkshire than the typical stock, because our stock is fairly tightly held. Most people don't want to sell it. There are two solutions to that. Three solutions, being one of them being not to put us in the index, but we are I think probably the most significant company in the United States that isn't in the index in terms of market value and a lot of other factors. So if you want to put Berkshire or a company like it in the index and not have some crazy market aberration, you could have one of two things happen, and this would be true, I think, more and more of other companies as well as they add them to the index and as more money gets indexed. One, you could have the company agree that at the time it was added to the index, that simultaneously the company itself would sell an amount of stock that was about equal to the index buying that would be generated. In other words, if we were to offer 100,000 shares roughly of A stock at the same time as being added to the index, that would neutralize the index buying. The only problem with that is we don't want to sell 100,000 shares or 10,000 shares or 100 shares of A stock at Berkshire unless we have some very good use for the money. It isn't going to happen. So we are not going to do something like that just because we want to be in an index. The other possibility, and I believe this was used in Australia when a very large mutual life company converted to stock. I think it was the largest company in Australia, AMP. And that would be to phase in the weighting of a stock like Berkshire. And I think later on they may have to do it for all stocks. But phase in the weighting, say, over a 12-month period, so that it was 1/12 weighted the first month, 1/12 weighted the second month, and so on. That means, in effect, there would have to be a market order once a month for 0.5%, roughly, of Berkshire. Well, I don't think that would be very particularly disruptive. And I think there would be, once you knew that phase-in was coming, there would be some anticipation so that you would not get big spikes in the stock and dips subsequently. I think that would be a logical way, but Standard & Poor's to date has not had to do that sort of thing, and they may have various reasons, and various good reasons for not wanting to do that. Now, if indexation continues to grow as it has, and you get a situation where 15% of the money becomes indexed, I think they're going to have to come up with some approach similar to one of these two that I've named, or that it will simply get too disruptive to the market. It would be interesting. I know American Online has behaved very well since it was introduced to the S&P some time back, but I would think that it might get to be the case that that if you simply shorted the companies that got added to the S&P after the S&P effect had been felt, you might find that those stocks would tend to underperform as that one artificial buy order, in effect, its impact wore off. So I think something is going to happen. I think indexation has far exceeded what anybody anticipated, including S&P or including me or Charlie. And I think there's been a good reason for it to develop. I think as it continues to develop, it will have more and more impact on the market in ways that probably S&P is not that excited about, nor would the index funds be that excited about. So there is likely to come a solution to the liquidity problem that might be particularly acute at Berkshire, but that prevails throughout the market that occurs when stocks are added. And I would think if they adopt some solution, that certainly if they adopted the solution of gradual weighting, that Berkshire would be a very logical candidate for the S&P. It really makes no difference to us what is done along that line. We would not be unhappy being in the S&P as long as it didn't have some huge market impact at the moment of putting it in. On the other hand, we love the owners we've got, and I don't see how we could improve on this group much by having the index funds. So we'll see what happens on it. It is not a big deal to us, and we want to be sure if we're ever at it, it isn't too big a deal to the market, because I would not like, the people who sold that day might like it, but I would not like the stock to jump up, $20,000 a share on one day because there's some market order for 100,000 shares, and then gradually work its way back down to where it should have been in the first place. No one benefits from that except the people who sell in the very short term, and that is not the group that I primarily worry about. Charlie?
My guess is that Berkshire will eventually be in the S&P index. Somebody will figure out how to do that sensibly. Maybe not soon, but someday.
Okay, zone one.